So thank you for accepting our invitation and joining the call. So regardless of the funding stage, the role of the current investor is always a crucial question, both to the next investor and to the life of the startup as well. We have seen many examples to a fully committed team member who is willing to tackle the monumental Excel sheet with the companies, to a very passive investor who is just turning up for the negotiations, and even when they are turning up, it's not for the good of the deal. So the panelists here cover the later and the early stages of startup funding. So let's discover together what they think and what their expertise is. Enikő partook in the later stage investments of Netical, Petya, Logi School, which is just recently closed, and Antin Komsignia has some invaluable experience. So the first topic is very interesting. So from your perspective, how does a subsequent funding round looks like? So is the startup who's calling you that, hey, I need to raise some additional funds, please help me? Or it is the investor calls you that I've been visited by your startup, so let's sit down and discuss. So I think there are some myths here in the heads of future scale-ups. So let's put things in order. So how does it look like in reality? Petya.
I work fairly closely with the founders I work with, being an angel investor. So usually when we start talking, when we start working together, the first thing that we realize together with the founder, or they realize maybe with some help, is that when do we need funding, when do we need more funding, and when do we don't need funding. So initially, I would say I'm the sort of investor that talks startups out of talking to investors. But sooner or later, they get to the stage where they need money to scale. They don't need money to survive, but they need money to scale. And that's the right sort of time for looking for the next round, in my opinion. If you don't have a product market fit, throwing money at it will not fix it. But if you do have that, then you need money to scale. You need money to grow your team. So usually I'm involved in the discussion way before they go to investors, and I have them get prepared. We talk through the scenarios, we talk through the investors available on the market, their needs, their strategies, but we also talk about what the investors need, how do you present your company, and we start working on the documents needed. I'm trying to be I'm trying not to be operative. So I'm trying not to do the work for them. But sometimes they do need my help to do a business model, for example. But then at some point, if I do the business model, I learn that the investor will realize that the team doesn't fully understand the Excel sheet they are presenting, and that's a big red flag. So I think overall, as an investor, as an angel, it's great that I can help, but I shouldn't do it instead of them. So it's the founders, the team, the company that has to do the fundraising as much as possible. But I can help with experience, with connections, and I think what's also important is I can help with introductions. And doing a warm introduction, sending over the material to an investor I already have deals together with, deals we looked at together, and some relationship, that helps tremendously in getting that funding done, or at least getting them, in the door. But then they still have to perform themselves. So I try not to go to all of the meetings with the new investors, simply because I don't want that meeting to be about me, and I shouldn't sell that company too hard. They should sell themselves.
A bit different in Hiventures because we have a lot of companies invested in, and I think we have a lot of maybe next round. So I will definitely talk about a lot of type of experiences because we have more of these next round investment. And I think what Petya mentioned is really important, that we should do it together with the company, because and in early stages we have to talk with them what is the runway, maybe in not the best way to find the next round, and what is the level of, for example, revenue or any other KPIs that you want to reach when you feel that you can go to the market and get a new investment. So it's really important to talk to each other and discuss the business plan, discuss everything, because especially here in Hungary, it's a small market. So if they go to another investor, they will definitely call us and ask about the project. If I don't know any details or the most important things, that how much money they want, what in which phase they are. So, and they definitely call the director or something in a higher level. Then now in our company, the investment managers is dealing with the company. So it's really important that when they are preparing for the next round, they have to discuss with us, and they have to ask our opinion about the materials as well. And we also have a network, so we contact them and introduce them to other investors. And it's also a common thing that they come to us and they want to look through the portfolio and find which would be the best matches according to their interests. So that's another way around. And that point, maybe we should try to fascinate and help them to prepare as fast as they can, because there are some interest from the market.
Antti?
I think what you mentioned as well, I think the preparation starts much earlier than you think. And one way to, you mentioned Consignia, and one of the things I'm really proud of, that they had an inactive founder problem at some point. And that was a problem that they had been carrying on for years and years. And there was this one meeting when, it was a very tense meeting at some point. It took 1 hour. And at the end of the hour, the inactive founder walked out smiling, and the problem was solved. And that's a very, very specific help, sort of to clear up the cap table, was one of the many things that in that particular case, we know how we could help way before these guys raised their follow-up round. So I think that's a very strategic thing, that you basically you work on that potential fundraising or planned fundraising in many ways. Working on numbers, working on their preparation. Are you investment ready? Can you answer the question of, ask 3 questions and they can't answer, then okay, you're not ready yet. Kind of preparation is also part of the game.
Okay, can we have the first question? So what are your expectations regarding your current investors' contribution to the next funding round?
That's good. I think that's very important too. There are so many failed investment attempts because of previous round investors, so it does happen. Wow.
It's rapidly changing.
Yeah, lots of answers. You're really active.
Thank you.
Great audience.
Okay.
So D is definitely a no, I think. So. Oh, sorry. Oh.
Can we go back to the result? Okay, thanks.
D is not an option. Oh, it went down.
So B and E. So either review the documents and plans, or become a full committed team member. So I think, Enikő, in your case, it's nearly impossible, no, to have a fully committed team member with more than
if we count the number of investments
Yeah.
and the investment managers, the masses cannot make it. So.
That means you need to hire more people, no?
Yeah, of course.
Okay, great. So what is the reality?
Can I just say, it really depends on the portfolio size. So I know there are different strategies talking about angel investing. And I know people who invest into one company at a time, or maybe one company a year kind of thing. And then they are really hands-on, and they are part of the team because that's what they like. I wouldn't say it's a typical strategy, but there are people like that. And then E is definitely an option for them. I don't think it's an option for you, and not an option for me. So,
yeah. So all right.
I mean, we have this incubation team, and in there, the companies can have some mentors who can help them. So they are not the investors, but we try to connect them and help them to find their mentors. So they should be as a team member there when they go for fundraising. But it's the really early phase, so
And
in
not
that
every
case
mentor is an M&A expert. So
Yeah.
of course, but they can help them in that part where they are expert in.
Does that mean in your case, regarding referring back to your sentence earlier, that you are actually marketing your early stage startups to later stage investors?
Sorry?
You're introducing, I mean, you are marketing your portfolio, for example, from incubation to later stage investors every now and then?
Not really the incubation part, but maybe the seed, late seed company. So maybe if we have connection with other investors, we may have more companies that could be interesting for them. So in that case, it's good to meet them and maybe marketing, yes, our portfolio, and especially the companies that they're going very well and they need more funding. So that's a good point.
One thing I think is it also depends on the size of the round and the team size, so a couple of different aspects. When we talk about like a Series A sort of investment, so a bigger round, few million euros, there's a tremendous amount of work, but there's also a tremendous amount of money at the end of the game, which means that I like to involve professionals who will help the team, who will work with them, mainly because it will take the extra load off of the shoulders of the founders. Because normally around a seed round, a late seed round, a Series A round, could take out the founder, the CEO of the company, like 50% or even more of his time for 6 to 9 to 12 months. Now, sacrificing 50% of the driving force of the company for a year, that is kind of crazy, even if there's a lot of money coming out of it. So in my two latest bigger rounds, we involved Leonard and team. So they helped us with the prefix box and the Logi School funding rounds. And it was really working great because I could focus on what was important for me, is mentoring the founders and helping them figure out what they want and helping them select which investor they actually want to land the deal with. And Leonard and team did a hell lot of work that the CEO didn't have to do. And I think this, for a Series A round, it makes sense. For an earlier round, the problem is that the money is not that huge, but this also means that the CEO gets dragged in and does all the groundwork. But as an angel investor, being active with over 2,000 companies, there's just not enough hours in the day for me to do their work instead of them. So they have to end up doing it. But also, it doesn't look good if they don't understand the material they present. So I think it's very important is that you cannot get out of this. If you're raising funds, you have to make the materials yourself. You have to be very familiar with everything that's in that Excel sheet, in that document, because they're real big questions. And if you don't know the answer, you won't get an investment.
Okay, so you invested in a company, you signed the term sheet, you signed the funding agreement, everybody goes to party, everybody sobers up, and then like 2 or 3 days later, they start actually working. So when is the time when you sit down with them and tell them that, guys, you will need a next round of investment, and you should start working on it like now or in a month, or, because the later the stage, the longer the period to get that money. Actually, what I teach to my incubees is that you should start looking for the next round the next day. What do you tell your portfolio companies?
That's pretty spot on. But I think more to the point is what we discussed, that you have to work on with the team to make them investment ready in coming to the next level. There's one thing that that you have to raise, quite another thing to find, say, the next marketing channel. And probably you have to work first on finding your, with the new investment, finding the next stage, come to the stage when you can actually go to the next investor.
Yeah, I think it's very important is that from each round you have to improve your numbers in every possible dimensions before you're ready for the next round. Sometimes if you raise too little money, the problem is that you end up in constant fundraising mode, and then most of the CEO's job is to go after the next round and the next round and the next round, and that kind of takes out the whole energy from the company, because then the company is just surviving to raise more money, but it doesn't go anywhere. So what I love is if there's enough time from an investment round, you see at least, I don't know, 18 months of runway, which gives you 6 to 12 months of building up some traction. Peace, but also it's very busy because you have to prove that you can spend that money well and you can improve your company from that money. The other thing that we advocate is the cockroach model. They also call it the zebra, which is very different than a unicorn model. The idea is that your costs and your revenues should never get too far away from each other. Basically, that you shouldn't spend more than 2, maybe 3 times more than what you can take in from the market. Because if they get detached, then your next round will be needed too early, your revenues will grow slower than expected, and you end up with a story that is just not sexy enough for investors. And if you do have a gap between investments running dry for a couple of months, that will kill you. So if you, for example, if you have 2-3 million forints of revenue, you pump up your team to 30-50 million forints per month cost, and you have 3 months delay in your next round. That's $100 million out the window. You cannot possibly survive that. And cutting back the team to 1/10 of its size or cutting back your cost to 1/10 is just impossible. So what we encourage, which is probably more suited for the Hungarian investment environment, is being a bit more modest and being a bit more real and raising money for growth, not for survival.
Anything to add, Enikő?
Yeah, I mean, I think they have to prepare, they cannot prepare too early, but first not go for the investors in the next day, but maybe try to make some differences in their plans, in their models, or something else that needs to be converted to a version that investors like. I mean, if they have a business plan and it's based just they have revenues, they have some costs, but if they want to go a type of different investor, maybe they need to restructure their plan. They have to track their KPIs or something else. So it's also good for us, but it's also preparation for the next round, because they have to show to the next investors that they really know what they are doing as a business, because sometimes this is the initial problem when they want to go fundraising and make a business plan, and we just see that, okay, but they need the data and the conditions behind and all the KPIs that you had in the past. And that time they just try to be in a hurry to make the materials well. So they can also prepare like this from the first day.
Thank you. Can we have the next question to the audience, please? So, yeah, how important is the current investor itself for the new investor in the next round? So, you know, there are investors who like to invest after each other, and there are investors who not so much. So, how important do you think it is?
Very balanced. Not so balanced anymore.
Okay, I think it's more or less settled. Thank you again for the participation. Antti.
Kind of. I think, to me, maybe I would turn around. I agree roughly with the percentages, I think. But I would turn around the C. I think it's all about risk mitigation, what any investor is trying to do. And I think this business is very much about your background and your track record. And if you have an investor on board with good reputation / good track record, I think that's sort of more of a multiplicator, and other people might just jump. It might be sort of herding in a bad way, but it can be actually quite attractive. It's sort of a big name is somewhere on the cap table, but it can be tricky because even if someone has a big success, it's one success. So I think it gets very, very thin. So to have a really good name, and there was a HunBan round when we went with reputation, and we skipped a little bit with the due diligence, and that wasn't that optimal. So we're learning from mistakes as well.
Petya?
For me at least, and what I see in the market, having an investor with a bad reputation can kill your company in the long run. Good reputation can obviously help open some doors. You still have to work for the success yourself. So ultimately, no investor will make your business work out. Bad investors might mess you up in terms of blocking you or distracting you from what you're trying to do. They might also make your next round harder or impossible. So just don't team up with bad guys. So easy.
Enikő?
Yeah, and it depends what does the bad reputation mean. So it can mean that they have some failing company, or they have not a lot of success, or it can have a reputation that they are not really founder friendly, the terms what they offer, or they have too many tasks to do with them. So it depends if you can deal it, or you can prepare for these some of not good things, and you can deal with it and say, yeah, but it could be a good project, or the other way is that it would kill the deal as well.
Maybe just very quickly that one evergreen topic is the investor with 70% in the company. That's not a reputation; it's just a plain automatic no. And and there are some other points in the term sheet that may cause the same effect. So, and if there's no way to renegotiate, then it goes into the trash bin.
One more question now that you said that killing the deal. So did it ever happen to you that you actually killed the deal? As the current investor, and prohibiting a startup to accept a subsequent investment, and why and how did you handle the consequences if it happened?
Petya mentioned using a consultant, and there was one instance when they were involved. We went to a company that I'm actually good friends with, and the mistake I made was that I opened my mouth. And at some point I sort of let Lena do the talking, and that was from then on it went much better. So I mean he has much more experience with he's in day in and day out, or a company like that has been in that particular situation much more often than even I do have a couple of investments, but still they've been around more, and so that was earlier not standing in the way. Sometimes a good strategy.
Petya?
Yeah, I don't think I ever messed up, but I don't know. We'll see. There has been situations where we discussed with the founder, and the founder decided that maybe this is not the investor I want to go to bed with. Maybe these are not the terms I want to take an investment with. There's also been mistakes in the earlier years especially, but probably I'll make some more mistakes in the future. For example, taking a seed stage company to a Series A fund, and we presented, we did our best, and they said that, even if you 100 times multiply your money, it will still be too little for us to make a difference, so no. And the mistake was that we didn't consider that their average ticket size was 5 million euros, and we asked for 150. So that happens.
Enikő?
About the mistakes, yeah. Sometimes we feel that they really want to go to the market, and as I mentioned, we have to do it together. And sometimes we just heard back that they go to the market. We didn't even see maybe the business plan, and they wanted to talk to us as well. And the other part is when they try to deal with the new investor separately from us, especially in a deal when we also in the round. So we had an experience when the company just get a term sheet, and the half of money came from us, but we have never seen the term sheet, not the terms, not the valuation. So it seems like a bit tricky when we talk to the new investor that sounds cool, but maybe we should talk first.
Did it kill that deal in particular?
No, but we have to go back with the terms and valuation and everything. So it's kind of messy when you try to discuss it and say, yeah, it's a good company, you should come, but maybe the valuation is lower because we've seen that it needs too many things to do. So it's like you are in one. In this case, we have two hats. The first is that we are the earlier investor. The next one is we are the new investor as well, or the next investor as well. And in this case, maybe we have to go with the company as well. So do not make any mess that they do before, but try to make it clear that we also have some view of the company and their future.
Okay, and does it happen that the new investor calls you in private? I mean, you know, and what are they asking?
Every time.
Okay, and what are they asking when the team is not there? What are the typical questions?
They want to understand the team, the founders, the business. They want to get my point of view on what I like about the company, what I find exciting. Obviously, they try to, get what I'm worried about, which is a bit tricky because I'm, I have a different interest. But yeah, that every single time this sort of discussion happens. So whenever you go to an investor, they will reach out to your existing investor. They will find channels to communicate with your existing investor and fish around a little bit for information. And in this respect, it makes a lot of sense to be on good terms with your previous round investor.
Can we have a next question?
Yeah, I think we did mention. So one of the things is a shitty term sheet or a shitty contract, like shitty cap table, clauses that don't make any sense and make a next round very wary about. Okay, if these guys signed these terms, then they're probably not good business people kind of thing. So not only that, so it spills on the team as well. So that's definitely something that also probably I would say that someone is too hands-on and well, maybe that's a style thing, but I would say if someone is too hands-on, I would probably not. I wouldn't want to be on the same investor team with someone who's sort of giving orders to the team.
Enikő?
When they kill the growth option, I mean, we had some co-investors, and then sometimes it feels that an investor just wants to have return on their investment. And if it's an early stage investor, they can expect that they want more return now, and they want to bring the company to be cash flow positive rather than go for the growth. And it could be really tough things that they want to pull back them from growing because they just thinking about their current return, and they don't think that they can do the growing. And in that time, they say that just go for being cash flow positive.
Yes.
I think what's most important is that it's not about making that deal. It's living together for a decade. And living together with somebody for a decade, that's like a marriage, even longer than an average marriage. So it's like very tricky. And it's not the good days that you have to be worried about. It's very easy to be a good investor when things are going great according to the plan, when things are growing. So I would recommend that you check out all of their previous investments, talk to the CEOs of those previous investments, and ask them the right questions. Because usually, and in any market, I guess, there are good and there are bad investors. And I think the main difference is how they react, how they behave when things aren't going well. If things are going down the toilet, if there's a crisis, are they making it a lot worse, or are they trying their best to help? And I think this makes all of the difference, because every startup will go through hard periods. I haven't seen a startup succeed just going like this. It's always like a Brazilian drama, TV drama. And you always have bad times. And you need investors who are really great when you're in trouble.
Unfortunately, our time is up. I think we could continue this conversation for an additional hour. So, yeah, thank you for your participation. Thank you for your activity.
Thank you very much. And the investors will stay, so if you want to talk about details of the marriages, the brides and grooms will stay with us.